Welcome back, everybody. You got Will and Iron Man here from the Block Runner, MetaZone, Rovi, and MScribe, and today we are stock runners again.
About time, dude.
Our true calling is upon us.
Yeah, more specifically, we're gonna say a new word here. Don't get it confused with NAT because it's very similar. They call it DATs. What does that stand for? Digital Asset Treasury. So we were wondering when is like the big unifying, label going to emerge. For a while, we were calling them crypto treasury companies, right?
Yeah.
Yeah, CTCs.
Yeah.
You can see that in some of our previous video titles. It's like, which of these crypto treasury companies are going to do well? So it's been something we've been keeping our eyes on, right? Because it's an interesting little pathway we see the industry headed.
Yeah, and the rabbit hole just continuously gets deeper as you look into it.
Turns out it doesn't stop at Bitcoin and Ethereum. Right?
No.
It goes many, many, many layers deeper. And per our initial predictions, right, we assumed this would happen. It would have to happen in order for like an actual mania to ensue, right?
Mm-hmm. Yeah.
If this is actually, cryptos.com bubble moment.
Yeah.
In order for that to play out, like, this needs to permeate throughout the entire landscape of crypto. So we got some evidence to suggest it's happening, right?
Not only that, Donald Trump is in it.
This is all evidence of evidences, right?
Yeah, historic day for CRO, which is crypto.com. Trump Media Group, CRO strategy, announced a $6.42 billion treasury play. See the press release. The link will be in the description. But some takeaways: definitive agreement for a business combination with NASDAQ-listed York to establish Trump Media Group CRO strategy was signed today. At completion, it will trade as MCGA, which is Make Crypto.com Great Again.
Of course.
Yeah. At completion, Trump Media Group CRO strategy will be the world's largest holder of CRO with 6 billion CROs.
Wow.
And this 6 billion CROs is approximately worth about $1 billion at the time of this announcement. So here we are, Crypto.com being acquired by Donald Trump and the Media Group. And there's a line in here. It says CRO will become the platform token of Truth Social as part of the broad strategic partnership, which slaps everybody holding the Trump token.
Yeah, that blows, right? If you're holding Trump's token, it's like, hey, why not us? Why not give us some? Well, it's a meme coin, right? You don't want to add layers of utility.
Yeah,
to a meme coin.
I was gonna say there's a good reason to want to add some like functional token, because if you compare Bitcoin to everything else, Bitcoin has a very specific use case, which kind of in all sense and purposes, like number go up, but all these other cryptocurrencies don't have that, but they have functionality.
Correct.
So yeah.
But yeah, man, we've been waiting for a while. We knew Trump was, gearing for some pretty big, movements in regards to the DAT space. We saw him make pretty big Bitcoin acquisitions in the past. And so we're wondering, when is he going to pull the trigger on like the big guns? But this was it. I was not expecting Crow of all things. I don't think the market was either, which is, we don't have the price pulled up, but if you were looking at it, it's up roughly 30% on the day. So I think you can imagine why. Currently sitting like around a $6 billion market cap, and Trump's Media Group claims they're going to buy $6 billion worth of this. So market cap must go up, right?
Has to,
or else they're going to buy the whole damn supply.
That's right.
So it's interesting. But yeah, why do you think they did that, dude? Why not just slam $6 billion into Bitcoin?
Well, because I think Michael Saylor is the leading front runner for, if you're going to get exposed to Bitcoin through these treasury companies, it's going to be Michael Saylor and strategy.
Yeah, so it's like nobody wants to be, especially Donald Trump and his organization, nobody wants to be like a second regard to somebody else. Yeah, so just let Michael Saylor champion that call. Let Tom Lee and Joe Lubin champion the Ethereum whistle call.
Yeah.
And then, I guess the rest of the market has to compete for what's left, right?
Yeah. Yeah, so these treasury companies are forming. They're buying all these different assets. And so now through traditional markets, you can get exposed to these assets via MNAVs and, everything we're used to. So if you don't know how all that stuff works, we have a tweet here that kind of explains everything. So I'll just read the beginning part here. So regarding the structure of DAT companies like Master or Strategy, and in this post, I will write an engaging research piece in the following order. So it's going to be capital raising mechanisms, valuation methods, actual holdings status, and risks. So what is a DAT strategy? The DAT strategy involves a company directly purchasing virtual assets with company funds through capital raising and holding them as financial assets. So on the balance sheet, assets like Bitcoin and ETH are held as corporate assets. For example, MicroStrategy's balance sheet does not explicitly list Bitcoin. Under US GAAP, which is generally accepted accounting principles, virtual assets like Bitcoin are classified as indefinite lived intangible assets.
Wow.
Yeah. In other words, the value of cryptocurrencies is included under other intangible assets. So in the case of ETF operators like Grayscale, the coin held are assets of the fund trust, not the operator's asset. So we have a company acquiring a digital asset that can use company instruments, financial instruments, to raise capital. And when they raise capital, they buy more of the asset. As a trust or an ETF, they don't have that under the category of operating assets. They're not an operating company. They're a holdings company. So they don't have the capability to just sell equity and buy more asset.
I see.
So they have different kinds of exposures to the asset. So this tweet goes pretty deep and explains very deeply the differences between the different DAT companies out there and how it all works, how they raise money. So it is a must read if you want to get into the space.
Yeah, even if you do read it and digest it and consume it, it's still not like the most obvious of spaces, at least not yet, how to pick, how to decipher between, because there's a lot. And we're about to go through several examples of this, of new entrants.
Yeah.
And we're hearing a lot of rumors through the grapevines of other people, basically everybody. If you attend any of these crypto conferences these days, everybody's like up in arms trying to figure out how to get a piece of this pie, right? So you're going to get a lot of participants.
Yeah, because the ongoing thesis is that your shitcoin won't participate in the market unless there's some institution acquiring your shitcoin.
I think that's a credible thesis, especially if you understand what's been happening to Bitcoin. Like we've shown the data on this channel, right? It's like retail had no purpose in taking Bitcoin past 100K.
Yeah.
That was all institutional buy pressure and like inflows from, Wall Street essentially. And so you could assume it's like, okay, why hasn't there been like a real crazy altcoin season yet? Well, the same players want to set up the infrastructure rails the same way they have for Bitcoin in order for them to get the upside exposure to the rest of the industry, right? So these treasury vehicles seem to be, and ETFs, right? This is the rails of institutional exposure.
That's right.
So we can't really. So theoretically, we won't see a real alt season until like all this stuff is well positioned
by Wall Street, and then you'll see numbers go up.
Yeah, because the purpose is to, like you're saying, leverage the rails of institutional finance to generate the capital to keep buying the underlying asset.
Yeah, and the amount of capital on Wall Street is
tremendous,
leagues and bounds, like way higher than crypto.
Yeah, so it's bullish, but again, it's not like an easy thing to kind of pick through. At least not yet, right?
Yeah, so we're going to go through some examples. Galaxy Digital, Multicoin, and Jump look to raise $1 billion for a Solana treasury company.
Yeah, Solana enters the chat, dude.
Yeah.
Yeah.
And
that was inevitable.
The three firms aim to create a digital asset treasury company by taking over an unidentified publicly traded entity. So this goes back to the previous tweet on like how they structure this. They go find a dying company, they acquire the assets for a few $1 million, and thereby acquiring the ticker. And then now the ticker is designed to only buy that underlying treasury.
Yeah, and they do that for logistic purposes, right? Because you can go to market quicker, I guess.
Yeah, it's called a SPAC.
Yeah, that way they don't have to wait for, I don't know, years potentially.
Yeah,
trying to spin up something new.
Yeah, spin up a new entity, go through the process to go public, and like it's a whole thing.
Yeah. So this is a very well documented process at this point. We've seen this a ton of times. So
yeah. So the other thing is the Solana Foundation has given its endorsement to this effort.
course.
Which is expected to close in early September.
Yeah, they saw what happened to Ethereum. It's like Ethereum was on death's doors, dude. Literally.
Sorry, TJ.
No, not sorry, dude.
I lived through it all, dude. We're on.
You can vouch, right? It was literally on death's doors until the awareness of like, okay, there's an institutional lever here at play to get Ethereum to follow the trajectory of Bitcoin again, because these same actors are what they did with Bitcoin.
Yeah.
They're actively doing with Ethereum, and now they want to just continue this propagation down the chain.
And I think Ethereum is in a special place just because of stablecoins. Stablecoins effectively make everyone with a internet access into their own bank.
Yeah.
Right? And so that's everybody on the planet practically.
Sound like Tom Lee himself, dude.
Right?
I can tell you've tuned into CNBC lately.
That's right.
You've heard his dogma quite well. And you probably also believe ETH is on its way to 600,000 per or whatever.
Not only that, he predicts that it could flip Bitcoin.
Yeah, man. See,
but that's what he's supposed to say, right? In that
has
position.
to, and it works, you know. Yeah. So who's gonna be that for Solana?
Yeah,
somebody. I don't know if there's more people out there left that have that kind of like credibility.
That gravitas.
Yeah, someone's got to step up though.
Yeah, so we're looking at Justin Pantera Capital is seeking to raise $1.25 billion to convert a NASDAQ-listed company into a Solana company, a public firm dedicated to accumulating SOL.
Could you imagine if it was Ansem? Could you see it? He just like suits up and like you just see him on CNBC like championing the top Solana Treasury Co.
Yeah,
I actually could see that happening.
It's possible,
just because.
It's sort of like that's the new version of companies like buying up like famous podcasters to like talk about their brand and only their brand. And so like that could happen in crypto. So the plan begins with the initial $500 million raise followed by $750 million in warrants. All right, Pantera's
in there, dude. Another one.
So we have this company, Sharps Technology, announces $400 million in private placement, seeking to establish the largest Solana digital asset treasury strategy.
Yeah, there we go, dude. It just keeps on coming.
Yep.
More and more. It seems like, you know, people know something.
Yeah.
Clearly.
Yeah.
People with money specifically, right? Because this is a pure insider game. Right.
Yeah, and look at the race that's happening, right? We have these three institutions here looking to raise $1 billion. Pantera, $1.25 billion. We already have a public company trying to raise $400 million.
Yeah, and then look at their valuation. Do we have the stock?
Yeah, it's right here.
This is a sub 10 million market cap company. How the hell are they getting their hands on $400 million of capital?
Yeah, exactly. So what they have to do is they have to go to investors, liquidity providers in a sense, and they have to pitch for $400 million just to buy the underlying asset. And not only that, part of the pitch is you got to do something crypto related with that asset because doesn't have number go up technology like Bitcoin.
It's
so it's
of course Solana has its own narratives, right? You know, internet capital.
So now there's a different market forming here. If you notice, we have these institutions, right? We have this public company. They all need a figurehead to go on CNBC, right? So they're having to battle on who's that going to be amongst the people trying to be number one in Solana. Right? All right, so let's continue. Flock.io. Breaking. We got this Flock's partner, CIMG.
NASDAQ company.
It's a NASDAQ company. Is in the process of adding Flock to their digital asset treasury and utilizing Flock's AI Arena and FL Alliance to empower its existing business model.
Yeah, so this stands out because it's not a blue chip like entering into the Wall Street equation. This is like a brand new token launch.
Yeah.
Literally, because we're about to look at the chart. This is like a day old or 2 days old. Part of its like TGE moment is incorporating a digital asset treasury.
Wow.
Collaboration / component. Like this is more evidence of permeation, right?
So that means you can't even launch a token without a public company dedicating to buying.
Not yet. It depends if this thing has to do very well, right?
Yeah.
Like if it does very well and proves a reputable strategy.
Man, this is crazy implications.
It is. It's like in order to launch a successful, viable Web3 product, aka token TGE.
Yeah.
You're gonna need to rub Wall Street a bit. get them some access to your TGE in the form of a treasury vehicle, right?
Yeah, can you imagine? So you're pitching your TGE to investors, and then they ask you, is like, which public company is going to be acquiring your asset?
Yeah.
And it's like, well, I don't know.
I don't have one.
It's
Well,
like-
here's a list of dead companies. It's like, pick them.
Yeah.
You know, you just raised $15-20 million on your Series A to launch this token.
Yeah.
It'll cost you like $1 million just to acquire it or whatever.
The public ticker.
Yeah, and then it's literally like a dual launch. You got your
Yeah.
stock and you got your token, right?
Man, but then you like triple your work. Now you got to go and raise capital to buy the asset while you're trying to build the business.
Well, but these guys are claiming that they have a unique spin to this. It's not purely just like a
True.
treasury play, right?
Yeah, so we officially partnered with CIMG to co-develop LifeNode, an AI-assisted wellness monitoring and recommendation product.
See,
So-
that sounds eerily similar to Theranos, doesn't it?
Yeah.
Like a wellness monitoring product.
Yeah.
Is it like that box you just stick your finger in and it's
Yeah.
like you're Gucci?
One drop of blood tests like 60 different
I
diseases.
mean, see, in Theranos' time, it was probably not doable, but with AI in its current
There's a
state,
chance, yeah.
it probably could work nowadays, right?
Yeah, so basically CIMG is it's a healthcare company.
Yeah.
Flock is an AI company, and so obviously healthcare and AI make a ton of sense.
Yeah.
And so they decided to kind of merge and cohabitate, this product.
Yeah, and I guess this health product requires some infrastructure provisionings on the behalf of Flock's end. And in order to do that, to have access to that, you need the token. So it's kind of like let's leverage this treasury model to, again, raise capital to acquire more of this token, which means I can theoretically accelerate the progress of this novel product that I'm trying to bring to market. If it works out, stock value go up. But it shifts the dynamics of it, and it's no longer just MNAV
Correct.
scores, right?
Yeah, so now you have CIMG, which is a publicly traded company who has a healthcare business who's now using AI to create better healthcare, but they're also the treasury vehicle of the Flock asset.
Yeah.
But they're not going to be valued as a treasury company because they're an operating company.
Maybe. Who knows?
Yeah.
That's the experiment at foot here. Maybe the market interprets some other different vector here of value. Right?
It's like, but they're both. It's like even more bullish.
Hybrid.
Yeah. All right, so we're looking at 0x Jeff here. So he's made a number of appearances on the show.
Typically around AI subjects.
Yeah. So he says a typical DAT structure involves a publicly listed company pivoting from its core operations into a treasury-focused strategy.
Yeah.
The company raises capital through debt and equity issuance, then allocates those proceeds to acquire crypto assets. The issue with most DATs is that the assets just sit there, balance sheet exposure, nothing more. That's cool, but it doesn't create real utility, especially if you're not Bitcoin, right?
Mm-hmm.
This is where Flock redefines the landscape. Instead of the pure treasury DAT, we're entering the era of the productive DAT, where the publicly listed company keeps operating its core business and Flock layers in domain-specific AI to actually enhance these products and services. In this setup, the acquired Flock gets deployed on Flock, setting up the tasks, incentivizing training nodes, delegate to validators and miners, fueling real-world AI applications.
There you go.
It's a valid thesis.
Yeah. Productive DATs, dude. That's what I mean. That's a new, when we understand how markets love new narratives, right?
Yeah.
So in the sea of new DAT vehicles, you can now segment them into new categories of productive versus non-productive. Kind of like arbitrary versus non-arbitrary, right? Because, new things are cool.
That's right.
We like to see new things.
Yeah, so we got a tweet by, who's this, Jay's son?
I thought it was Justin's son at first.
Yeah, right?
And I immediately was all in, right?
Yeah.
It's like the new Justin son is here.
So today's DAT narrative is broken. Most treasury reserve companies today are just investment vehicles, middlemen chasing retail speculation. That's not crypto equity. True crypto equity strategy is when listed companies must hold tokens because they actually use the on-chain product. Anything else is speculation disguised as MicroStrategy. As markets mature, utility-first projects will outlast hype. You know which project I'm referring to. So who's Justin or Jason.
I got you there, dude.
Flock founder.
Yeah. So of course he's gonna stand up for his own approach, and I think that's valid. So, but like we said, this is like a brand new thing. Currently trading like around 40 million market cap, it seems.
Yeah. So in the last 24 hours, it's down 25%. But yeah, so it's trading at 38 million market cap.
So we'll see. We'll see, dude. We'll see if this strategy works. And then, yeah, here's the public end of this operation.
Yeah, CIMG at 9 million market cap.
Yeah, so a couple tickers to pay attention to if this thing. Oh, yeah. Another thing to pay attention to.
But the story doesn't end.
Yeah.
It continues with story. On August 15th, NASDAQ Cask officially closed the PIPE financing. PIPE, if you want to know what that is, go to the second tweet there. To establish a treasury strategy focused on IP, which is Story Protocol.
Yeah.
As promised, the Story Foundation will carry out an $82 million buyback program on the open market running through November 16th. The 90-day window began on August 15th. We'll provide periodic updates on Story.
It's a lot of money too, dude.
Yeah.
And you're wondering, like, how are they able to pull this off?
Yeah, how are they able to pull this off? Because Story Protocol, almost $6 billion fully diluted value, made $24 in revenue yesterday.
Yeah, which was a couple weeks back. But
and
still,
so I saw this, and I was like, there's no way. So I asked Grok, I was like, can you verify this? And it searched, and
yeah,
it was true.
It turns out not many people want to register their IP on chain as per the original thesis of Story Protocol, right? But that doesn't matter, right?
No.
In the era of digital asset treasury companies, who cares about these like actual user metrics and such, actual viability of products? So long as you can bring it to institutional rails, you've got viability, you've got potential sustainability.
Yeah.
So long as this new meta, I guess, continues to fester, right? Because again, now institutions have exposure to crypto AI sector through this token, right?
Yeah. Well, as interesting as Story is, the founder or one of the founders is exiting Story after 3.5 years of building it.
Yeah, what a crappy timing, dude. Right before they go Wall Street.
Yeah.
Why would you leave? Why would you leave your lads?
Like, I mean, it looks like he's having a good time. Why would you want to leave this? I don't know.
Yeah, look at that. Look at that brunch, dude. They're eating good down there. What is that? Is that like Korean barbecue, dude?
Yeah, what is that?
They're feasting over there. And you want to leave?
Yeah.
I mean, I guess, dude. More power to you.
And this isn't the first time we've seen founders, just kind of leave after, raising funds, spending a year, vesting, and just
they're out of here.
And then they leave, yeah.
They're out of here, dude. I did my part. I got this thing, to an insane valuation somehow.
Yeah.
And you guys take
made
it from here.
$24 yesterday in revenue.
Yeah, man. So hopefully Wall Street doesn't find out about these metrics.
It's fake news. It's FUD. You're fudding.
Yeah, hopefully. So the grand takeaway is what? Again, this is obviously.
So we got productive DATs, and we got the traditional treasury companies that don't do much, like MicroStrategy, but that's Bitcoin, so they can do that. So grand takeaway is, I don't think a lot of this is going to work long term.
Well, for sure, yeah, obviously not. But do you think that before the, time horizon where everybody realizes this is not going to work, there's going to be a period where things are working to an extreme degree? So
the saying says, while the music is playing, you get up and dance.
Right.
Right. That's what you do. So, the music is starting, it seems.
Yeah, but still, it's kind of hard to figure out your dance legs, on this one, dude. So it's not an easy dance to pull off. I myself, I don't know. Yeah, I would approach this with extreme caution and skepticism for sure.
Yeah, I would agree.
Yeah. If you really want to play it, like you think Wall Street really is going to inject trillions of dollars of capital into this industry, then I would just stick with like the blue chips, the MicroStrategies, the Bitmines, the
Yeah.
SBETs, stuff like that, right?
Yeah, if they're on CNBC, that's a pretty solid bet.
Yeah. And then everything else, pure entertainment value, right?
Yeah. All right, guys, that's it for us. If you find anything interesting in the treasury space, we'd like to hear about it. And I appreciate you for watching, and we'll catch you in the next video.
Peace.